Broker Daily Uncut.
Broker Daily Uncut.
News, views and opinion about what's shaping Australia's mortgage and finance industry.
Before we start, a quick message from UBank. UBank is helping brokers bring better value to the table with no LMI home loan options for smaller deposits. So visit ubank.com.au/broker to find your local BDM to see what the award-winning team can do for you. UBank is a part of NAB. Credit criteria applies.
UBank, money done better.
Welcome back to another episode of Broker Daily Uncut. I am your host, as always, Julian Barnes, and with me is Finni's best and brightest, Costa and Eva. Guys, how are you?
Doing well, Julian. And yourself?
I don't want to throw shade on the other brokers, actually. Specifically, as you mentioned just before we recorded, that you guys have all closed pretty much all your SMSF deals.
Yes, we did really well with the whole SMSF situation. We got some contracts in the last minute on a Sunday night.
Yeah.
But we all got there. There was only a few that missed out, but vast majority are very happy people.
Well, that's great to hear. I mean, obviously, we're going to unpack all of that in today's episode, but we always like to start a little bit. Obviously, actually, let's start with the rates, of course, because we are recording before the rate announcements. I think the banks on this one are relatively unanimous, although I'm not going to make a call. It's going to be a hold. All the majors are saying hold for the rest of 26, actually.
Yep.
What are you guys feeling? How are you guys feeling for this?
I'd probably say the same.
I would have said the same, but since now they all agree,
It's always worrying when they all agree. I think, was it Westpac was the last one to move?
Yes, correct.
Yeah, Westpac was the last one. Obviously, inflation came a little lower, employment's a little higher, I think. was the things that
I don't think there's too much data to suggest otherwise. Hopefully it is a hold.
it would be very unwelcome to raise rates right now.
There was some interesting stuff I saw about, that now the RBA is contending with this softer housing market as well is a new issue that they're looking at. Is when you talk to your clients, how much is the rate weighing on their decision making over other factors such as the falling house prices, such as the changes to the budget? What is it one of the main
I think
things?
rates never is the problem. The servicing is. People obviously rates are high, but people still want to buy property. What stops them right now is confidence and certainty in what's going to happen, and servicing. Which is really, really tight right now.
Yeah, and it's obviously not going to get any easier, it seems. Well, the banks aren't saying until maybe 2027. That obviously all flows through onto some interesting statistics here. Actually, let's talk about the clearance rate super quickly. So this is the preliminary clearance rate. Rose to 55.1%, its highest level in 11 weeks, but that probably says a lot more about the last 11 weeks for this week. Remains well below the 68% decade average at this time of year. So we're still looking at a pretty subdued market, and obviously only 1,300 auctions scheduled this week. Obviously, it is winter, I guess. So, we'll see how it picks up.
The spring season tends to be the busier one, but it's creeping up slowly over the past month and a half. Now, can we take anything from that? I don't know, because it's such small increases. There's bound to be a bit of a downturn throughout that trajectory, but, it's slowly gaining some traction. But is it going to go up to that 68% anytime soon? I find that very hard to believe until market conditions get better, rates start coming down, cost of living starts stabilizing and all that sort of economic stuff. So we'll see.
It'd be interesting to hear what the people that are at those auctions are saying, whether their justification for buying right now, if they think that we're kind of at the kind of bottom of that trough now, or whether they just have to move at this point, or they just love the house that they're looking at.
Well, a lot of the auction results, a lot of them are going to be mainly owner occupied properties, especially the freestanding dwellings. Not many investors, unless they've got a bigger plan for the land, they're basically owner occupiers. So you sort of got the emotion attached to it. They sort of want the house. It's a house that they're going to live in with their families. And, I reckon a lot of people thought they were going to get more than what they were going to get for the house that they were selling to then be able to move. I think when it comes to auction results, the vast majority are owner-occupiers. Doesn't really factor in the investment market too much. They're usually your for-sale properties and stuff like that. So,
I think it's good to put that into, perspective that so far, and the numbers are in here in the document, Julian, the national home value fell 0.7%, right? So maybe, I don't know how much it is since the beginning of the drop, but even if it fell 10%, we still would be...
It's still single figures right now, I think.
Yeah, still figure. Even if it was 10%, it would be like the level of 2024, pretty much, in terms of price range. Yeah. So we're probably not at the bottom of the crisis, if you can call it that way. But if you can snatch something, even with 5% discount, you're doing pretty well.
Yeah, and it seems to hit... I mean, this is interesting. So Westpac did its quarterly figures, and it found that investor applications have fallen 26% since the federal budget, compared with 18% for owner-occupiers. Yeah. So it is definitely weighing on investor sentiment. But then at the same time, there must be some investors that are kind of slowly regrouping and looking at the market and starting to... I
still think investors want to...
100%.
They want
still
to.
Want to enter.
It's a great time to buy, like when everyone is panicking, and the issue is servicing.
Yeah, and we're going to get into. I want to talk a little later about kind of neutral gearing and some of the other things that might bring more investors back into the space. You're seeing as well that this is quite interesting. The first home buyer demands, Gen Z, millennials, they're recording the sharpest decline, 20%. So this is Equifax's data. So they've seen a 16.4%. This is over Australia, over all age groups. 16.4% year-on-year decline in July, suggesting that this slowdown is becoming more entrenched. But the downturn in first home buyers was 19.1 and 20% in year-on-year in July, following 20% decline in June. But then if you look at young people, Gen Z, 21%. So obviously you're seeing a more cautious market there as well. I guess for people first entering, there's far more moving parts now than there was potentially a year ago.
Yep. Yeah, it's. If I'm just going to be honest with you, everyone's servicing has been hit, and with the prices coming down, or the values of houses coming down, your serviceability has come down more.
Yeah,
and that's where people are really struggling, and that's what they don't tell you in the media. They just say house prices are going down, less people entering the market, all that sort of stuff. But you've actually got to look at it. If house prices have come down, let's say $100,000, your serviceability has come down $150,000.
Right, so it's impossible. It doesn't actually help you.
No, house prices are great that they're coming down, but the serviceability, as Eva was saying before, is what's restraining a lot of people. And investors hit it twice as hard because they would negatively gear their properties from the beginning. So they've lost the negative gearing aspect of it, and we'll go into neutral gearing later, like you said. So they've lost the negative gearing aspect of it, and they've also copped 3 rate rises. So their serviceability has gone down. That's why there's not as many in the market. So it's a weird time at the moment, and what you're seeing here isn't just because people don't want to enter the market, it's because they can't.
But at the same time, you have new new strategies. Doesn't it mean that you enter at a slightly lower end of the market? Because you still have the 5% deposit scheme, you still have different help to buy schemes. Doesn't that mean that you just buy within that? As you say, that sure, you're missing some serviceability there, but also house prices are down. So it depends kind of which way you frame it. Sure, it eats again, a little bit. But
if I'm going to want to live on the inner west of Sydney, I'm going to want to stay in the inner west of Sydney. I'm not going to want to move to, your outer suburbs. So people, there are probably some people that are going, I want to live in the inner west, but I'll take that suburb 1 or 2 out and be able to buy at a lower price point. Yeah. But if you're going to want to buy in, say, your Marrickvilles or Stanmores in Sydney, and you're not willing to budge, well, prices have only come down so much. Your serviceability has come down more. So,
and you're seeing different people in the market. So I'm interested to see how you react to this. You might have seen it. I think The Guardian originally reported on this, but it's spread further than that. So 1,485 properties bought under the 5% deposit schemes, I think since 2020 to May 2026, have been now converted into investment properties, which is only 0.7% of around 208,000 guarantees issued in that time. And they also noted that 89% of the scheme borrowers are actually ahead on repayments. And it also noted that I believe one of the couples, this includes 1,000 single borrowers earning over 200K a year and 1,200 couples earning over 275K a year. So it depends which way you frame it, right? You could either say there's people exploiting the scheme, or it's showing that there is far more people that are in requirement of the scheme over time than you think.
Yep.
I personally wasn't that surprised that a small amount of people were starting to use it as investment properties at the time.
People do that all the time, even with their home.
And I think that's exactly it. Like as a first-home buyer, especially if you start with buying a home instead of buying an investment, you want your home to be a serious investment potential, right? So potentially those people have bought a home, lived in for a year or two. It's a 2-bedroom unit most of the time. They might have got married, got kids, it doesn't suit anymore, and they have the capacity to actually move on while keeping.
Yeah, it was framed as a failure of the scheme. And I thought, A, that's a very small number, and B, it ignores all the kind of life context, the success that those people might have found. Some of them might have just gone overseas.
Yeah,
0.7%. Come on.
Nothing.
Come on.
Like we see people all the time, like clients, living in a house, and then they're like, "Oh, I'm moving interstate for work or whatever it is." And like one of our brokers deals with a lot of expats, and they've got their family home, they pack up and to work overseas, and when they come back, the house is ready.
Well, I'll tell you, this will happen more and more because people that have bought properties before the budget are the only property eligible for negative gearing. So you would want to hold on to that property, even if you can't live in it anymore because whatever family, or you don't like the location anymore, whatever it is, you would want to keep that one.
It makes very little sense to change it, right? And I guess as well as that, on another path that's what you're seeing, some upgrader activity.
Like I said, I think it's negativity for nothing. Like that happens everywhere. It's nothing that we don't see quite often, and I don't think we'll stop seeing, to be honest.
And I mean, it sounds like they scammed the system. This is what the system
they're playing
offered.
within the rules. It's the same as one of them. They said it was like a shocking. It was like, I think the individual earned 674,000 a year. They used 5% deposit scheme. I'm like, well, why wouldn't if it's there for you and it makes sense and the numbers add up, then why wouldn't you?
If they're allowed to do it, I don't think they're dodging the system, because if the system's allowing them to do that, and there's no wage cap, so what are they doing wrong?
Yeah.
Different if there was a wage cap of like 400 and they earned 600 and they did it. All right, that is obviously dodging the system, but if the system allows it, they're only doing what they are allowed to do in the end.
Yeah, absolutely. It's interesting though that you'd have thought that if you have that kind of salary,
if you're on that
you
sort of
want
money,
to put some more equity into your home to not pay as much interest. But there we go, guys. We better take a quick break there. Back in a sec. So this is the moment from our sponsors part of the podcast, and you might want to listen up, because UBank could help you deliver even better outcomes for your clients, all without any extra effort. The UBank team prides themselves on being able to make it easy to get your clients a great deal, while making the process crystal clear for everyone involved. It all adds up to Australian brokers being able to close better value deals fast when they choose UBank. But that's not the only reason brokers love UBank. They've also got a really slick digital application, no LMI options, and they back this up with outstanding service. And if you need proof of this, BDM satisfaction among UBank's active brokers was 92% according to their latest survey. Just another reason to drop the team a line. Head to ubank.com.au/broker to find out more. UBank is a part of NAB. Credit criteria applies. Now, let's get back to the chat.
UBank, money done better.
Welcome back to Broker Daily Uncut. Now, obviously, rates are one big thing that happened today, but also what happens, was it Sunday was the last day? Was it? Yes.
Sunday was the last
Sunday was the last day of SMSF borrowing for residential properties. End of an era, I guess.
For now.
For now.
I think
we've
it will come
seen
back.
similar policy changes. I haven't been in Australia long enough, or perhaps alive long enough, to know the different contours that this has taken. But obviously, who knows what will happen in the future.
Yeah, so Sunday night was the last day that the contract of sale can have on it. We had a client who did it, just after 8 p.m, signed the contract.
Wow.
And just got in with 4 hours to spare. Well done to them and the agent who was willing to work on a Sunday afternoon or Sunday night. But yeah, we're done and dusted with residential purchases for SMSF. I think it is only commercial now and refinances, which I think we've had a bit of a bump in inquiries on the refinance side of things.
Yeah.
Which is good, because SMSF lending is usually one of those things that set and forget.
Yeah.
And you can sort of start paying a loyalty tax to that bank, which isn't good. More money in your pocket's better than theirs. So yeah.
Can I take you back very quickly though to over these last 45 days, what's it been like? I remember halfway through you said it was pretty busy.
Yeah.
Did that remain the whole way through? What was the kind of go there?
Yeah, we still had inquiries, probably 10 days to it.
Yeah.
And people buying like that late in the game.
Was it easy? How was working with the lenders and stuff? Was it pretty easy to get stuff through?
They got a bit delayed by the last week with longer turnaround time, which was expected. So they actually did really well, I would say. Obviously, it's not finished. You said done and dusted. Now we've got the whole settlement process to go through, which would take probably to mid to end of September.
Yeah. I've got an extended settlement with one of mine, so that should be fun.
Nice.
But we've had a really good success rate. I think each brokers actually reported one client each not proceeding. And I want to give a big shout out to buyer's agent because everyone that was with the buyer's agent got something.
Oh, I see. That was
and I think people were just trying to make it work themselves. In my case, anyway, was somebody that just didn't have enough connection, I guess, to make it happen. That was a huge increase in business for us. And then we'll see what commercial and refinance can do. Or if SMSF really is gonna flat out. And
it's going to be interesting there, and I'm interested to see if it's impacting any of your conversations yet, because I've talked to brokers about, obviously refinance is going to remain, but you've got a shrinking pool of clients there. I think obviously, and then some lenders will step back, which will mean other lenders can kind of step forward. I think last week we talked about some lenders have some pretty heavy, not penalties, but fees to come out of to refinance and that kind of stuff, which is obviously difficult. What have people been saying about commercial? Because in my conversations, like, it's not for everyone. I talked to Bluestone about this. I talked to a variety of brokers. They said, your average mum and dad investor who has an SMSF, commercial property isn't necessarily for them, and it's not. Let's just change to commercial. That's not how it works. What are the conversations you've been having with?
Yeah, I'd probably agree with that. Commercial is a different beast. Yes, it's the same asset class because it's brick and mortar on a block of land, but the way it operates and, the leases and everything that's involved is much more difficult. It's not like something you just put on and then, you have hordes of people come in to want to rent it out. It can sit there for up to 3 to 6 months and you've got to fund that period. Whereas to residential, if you're buying in, the vast majority of places in Australia, there's a good chance that it will get rented within a month, 2 max, in the off chance. So
I think it's the price range as well. It's easy to find a $500,000 resi.
Yeah.
That's worth it. For commercial, it's a lot harder to hit a good deal in that price range.
Yeah, you sort of start having to go regional, sort of warehouse strata titled sort of places. And then, how many people are really going to be looking for those? If there's a downturn in the economy, your sort of e-commerce business, which traditionally take those sort of properties aren't there. So again, the risk factor is much more, and it's not something you can just go, cool, I'm doing this now without actually doing your homework.
Yeah. Is there other ways? So some of the brokers brought up, I think it's fund cash, buying in other means into residential using your SMSF. Is there other routes in, or?
Is it? I think that's what you're referring to, where they pool the money together and they buy and a commercial, syndicates, stuff like that. Yeah, that has become more popular. I had a client many years ago that did something like that. I think MA Money do things like that as well, where they pool all the money together and they buy like a shopping center or something like that. Yeah, I reckon it may.
Yeah,
just not for everybody, right?
Yeah, no. Again, like I've only ever had one client out of all my years ever do that. But I guess they'll want to put their money somewhere else, and maybe it does become an option now.
Yeah, new ways will emerge.
Yeah,
with how to do things and where, how.
Do you think it will have a broader impact? So I'm always caught in this as a journalist, trying to work out. I think. Because I've done impacts on the wider housing market right now, because some people I talk to, including some of the industry associations, say this is going to have a pretty detrimental impact on housing supply. It's going to have a lot larger than the government initially forecast.
Yeah, they thought 4,000. It's actually 16,000.
Yeah,
probably a year.
Which is a lot, right?
It's just a big, it's a big, and then they got this number from talking to lenders saying how many new SMSF loan did you get this year? Obviously, they're all investment properties. It was 16,000, not 4,000.
How did they get that? And the other part, I remember we talked about this the other week, didn't we? That their calculations of what the kind of LVRs are on
Yes.
SMSF, it's far safer than most investment properties.
it definitely is.
Most of them are 80%. So it's a different kind of ball game in terms of the risk profile.
And a lot of lenders require you to have cash in your account to be able to fund any
Liquid cash, yeah.
like a vacant tenancy or something like that. Whereas within your personal name, you can just go blow all your money and you may not have a dollar, and your investment's vacant, and you got no money to fund it.
Yeah.
So in that regards, it was much safer to purchase with an SMSF because the policies and sort of the rules around it required you to be like that. So I don't know where they got that information from, but
I guess last but not least then, I suppose, as brokers that are operating in the SMSF space, are you guys looking, it's difficult for you to know, but are you continuing to allocate a lot of resources there? Are you thinking that this is going to remain a pretty active area for you guys? Or is it something that you're starting to look, let's start diversing resources elsewhere, diversing our attention elsewhere?
I think it would take a little while for people to potentially move to commercial.
Yeah.
There'll be less people willing to do this or willing or able to take the risks that goes with that. So it won't be as big as it used to be.
Yeah, I don't think it's going to be as big as people think, but there will be a bit more of a flurry of people, but nowhere near what residential was.
See what happens. Guys, let's take a break. Back in a sec. Welcome back to Broker Daily Uncut. Now for the last section, we always like to talk a bit about policy. So the first bit of policy I want to talk about, it's more of a general bit of policy, and it kind of relates to a lot of the stuff that we've been talking about as we've been going in this episode, which is neutral gearing, right? It took me a minute to get my head around how this works, and that it kind of always existed. It's more giving back what's already there rather than trying to, in your serviceability, rather than trying to create, gold out of thin air. Could you guys, Eva, could you explain how neutral gearing works a bit more for me?
Yeah, sure. So what happened with the budget is they got rid of negative gearing for all investors. So what the bank did is literally in the little Excel spreadsheet just got rid of that part. Right. What we've seen coming back in the last week or so, not always officially bank announcing it, but while we talk to assessors or see what's going on, is they introduce again what was existing and always part of what the budget offered or was there, but not really looked at. So is neutral gearing. So they're now offsetting any expenses you would have for that investment property against the income for that investment property. So it does help servicing quite a lot because they used to tax you on your pay-wage job, let's say, plus your rental income. Now they will do it on your pay-wage job plus your rental income minus the expenses against that property.
Yeah.
So, if it's a difference of, 30 grand, that is taxed at 33% or whatever it is, that will help you servicing by almost a third.
Yeah. Yeah, it has been, and I feel like it's going to be something that a lot more people are going to start talking about now.
Yeah, so only a few lenders have gone in for this.
So Macquarie's been doing it for probably...
From the beginning, I think. When they got their new servicing calculator
Yeah, very quickly they're like, well, that's what it is, so let's do it. And always they're the first.
I was going to say.
Yeah, when this was, you explained this to me, my initial question was like, why wasn't this in straight away? Because...
I think it's just adapting like IT-wise, system-wise to actually, we've been missing out that part in servicing. So Macquarie announced it. First Mac announced it.
Yes.
Officially. And then when we talk to assessors, like for example, CBA, I had a deal like, it's failing servicing, but actually if we do the neutral gearing, it actually works. I'm like, well, why shouldn't we? Like it's part of what's happening. And it works.
How much will it give back to, like how much will it enable investors?
It won't be a huge difference, but like let's say if you pay 30 cents, 33 cents tax a dollar, like the mid-bracket type of income earners. Like,
33, 36 cents.
Yeah, so if it's on 20 grand, like it adds a little bit back to your income pool. It won't make a big difference.
No,
But if you are somebody
those knife edge deals, it suddenly makes it come
100%.
down on that the right size.
Say they're only servicing at 670, but they want 700. You can get them over the line now with this neutral gearing stuff. So again, it's not like negative gearing, which really helped. And again, that depends on a lot of factors, income and all that sort of jazz. But it's going to help. It's going to help. And it'll be the new talking point. And I'm sure down the track, they'll probably want to get rid of that as well.
Would it change? I guess
Well,
it won't.
it's actually the same now as in the trust or
Yeah,
company.
that's right.
Like that's what's happening.
Yeah.
But I think like a lot of people we've assessed in the last 2 months have been assessed on the lower side of what they actually can do.
Correct.
Thanks to this. Now, what's really hard to know is what bank actually does it. Because it hasn't been really spoken about unless, it's Macquarie or First Mac.
Yeah, I think a lot of lenders.
Yeah, will they
still
come
trying to
out?
get
Do they
their
come
head
out and
around it.
announce this? Like, oh, this
Only
is
Macquarie and First
Only
Mac.
Macquarie and First Mac have
That I know
announced
of,
it.
yeah.
And like you said, CBA in the background are doing it. I think it's more just trying to get their ducks in a row before they go, hey, this is what we're doing.
Yeah.
They're
And
probably all doing it. It's just not known enough.
yeah, and Macquarie is that bank that are just on the ball in regards to absolutely everything they do. But that's sort of the Macquarie brand, I guess. So yeah, watch this space.
Yeah.
See where it goes.
Review your servicing.
Will it?
Yep.
Yeah, absolutely.
Definitely.
I don't think it will, but I'll ask you, will it change the kind of type of properties that investors will look at?
It could, like you might go to a better suburb or from
Look
2
at
bedroom
rents
to
more
3
and
bedroom.
stuff. Yeah.
It would definitely help. Look, again, the cheaper suburb of each big cities are always the target market for investors and first-home buyers. If you give an extra 30, 50 grand servicing, that investor might go to the next suburb.
Yeah, so it does hand a lot back. Guys, the other policy, more specific policy I want to talk to you about was AMP has raised fees on could you fill me in?
On discharge and annual package fees, which is really annoying.
Yeah.
Is that par for the course? Where does that land in the kind of overall landscape of policy right now?
Look, we've got, like, for example, you got Suncorp that's been waiving annual fee forever for the life of the loan for years now. Most of them are like $250 to $400.
Yeah.
And then AMP is jumping from $390 to $490.
Wow, that's good.
That's 25% increase in one hit. And really, like, what is this for? An annual fee, like...
Did they say why?
I think there's retention happening there.
Yeah.
Because on top of that, the discharge fee has jumped as well from $350 to $415.
Wow, $415. Yeah.
Yep. So, obviously, if someone wants to leave AMP, it's like, well, here you go, you got another $100 there that you have to account for, on top of the solicitor's fee and discharge of mortgage and registration of the mortgage and blah, blah, blah. So if it's a small...
But listen, it is a small amount, but when you do the calculations on it, and we do the calculations a lot when we refinance people, those fees do add up. And then sometimes it does get to the point where it's like, well, to save $500, like, I'm not going to do it. Like, whereas
and it depends on the client. Some client just to save, overall $100 over the lifetime. Versus having to pay up front, they're just like, well, I'll just leave it on.
And then they've got to pay like sort of the fees if they've got any from.
Yeah, I've got the numbers there. For example, on a $300,000 loan, if you refinance to save 0.1%, which some people do, like it's small, but it would add another 4 months to the payback period.
Wow. Okay. Yeah.
So if you got a $600K loan or $1 million loan, obviously it's like, well, is it worth it?
Yeah.
So they're gonna use that as
100%
as retention, for sure. And we do see banks, like, obviously there's been a massive drop in application for investors and first-home buyers, which are, all their business.
I guess it will go to the kind of the refinancing war that I think will,
well, that's what's brewing at the moment. There are some good deals that a lot of the banks are doing to refinance, which is good. Usually when we would escalate something or get some special.
Well, they've got to find business somewhere.
Right?
100%,
and that's where their money comes from. The interest that you've got to pay to them. So it's basically the main income source of all the banks. So. It's good for the client. If you're looking to refinance, now's the time.
Not if you're an AMP client, but
depending how much your interest rate is,
that's
going to
true.
move.
That's true.
I don't know. Often you see a bank doing things and then they follow. Others follow. I don't know if anyone really follows what AMP does in general, but you would hope that doesn't become the norm.
Yeah,
because it's sad. Like it used to be like break fees for variable as well, and then that's been banned, and now it's like, well, that's actually sort of
it is kind of anti-competitive, right? Because you're not competing on your policy and being providing the best service. It's more competing by saying you can't leave.
Like these fees mean nothing in the end. They're just fees.
The annual fee is like, okay, for an offset account. And it's like other banks do it for free. Like,
well, SMSF, I remember last week we talked about, so SMSF can have some really hefty fees to refinance.
Yes, well, some of them went up with some of the lenders, actually, now that you bring that back. But they were in the thousands. I think it was 2,200, one of them. And again, that's, mate.
They're not a consumer loans, though. So it's
I know. And that's
rules.
the thing. Yeah. And that's why refinancing out of an SMSF can be difficult because of the fees. So you're going to have to make a pretty hefty drop in discount to make it worth your while.
Yeah. So if you are AMP clients, move on. You've got until the 26th.
Call your Finni broker and we can help you there.
And before you get hit with that.
You heard it here first. Guys, let's finish off there for the week. Thank you so much for joining me on Broker Daily Uncut. As always, if people want to find out more about Finni, what's the best place that they can go?
You can give us a call or go on our website, finni.com.au. Book a time to chat.
Ideal. Well, thank you so much for joining us, as always, and see you next week. Not only do Ubank support this podcast, but they also support brokers with award-winning service. And they've got some great low deposit loan options, so your clients will love them too. So, to unlock a better broker experience, visit ubank.com.au/broker. Ubank is a part of NAB. Credit criteria applies.
Ubank, money done better.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.